Good morning, everybody. I'm not sure if, just make sure if my sound's not working properly, you guys let me know. It is April 14th. I'm going to do something a little different today. I think there was some economic news coming out. I think on the inflation that's caused by international trade. And so I might make a comment on that depending on what time it comes out. But what I did want to talk about is I wanted to talk about two companies that reported earnings today. They're two of the favorite companies of America. I'm sure we've all heard of them. One is called J.P. Morgan, right? And then the other one's called Goldman Sachs, which there's some other nicknames on the street for Goldman Sachs. But I don't think it's appropriate to discuss those nicknames here in this broadcast. But anyways, what I wanted to do is I wanted to talk about these two companies. Now, keep in mind, folks, this is educational purposes only. I have no opinion as to whether or not you should buy or sell these stocks or do nothing with these stocks. I am literally just reporting on the information, and see what you guys think about the information that I'm going to be reporting on with regards to these two companies. I'm not reporting, I'm just kind of commenting on it. They reported their earnings today. So these two companies reported this morning before the market, and I kind of want to go over them. But before I get started with this excitement, what I'd like to do is talk about something that impacts every single one of us. So here we go. You ready? I'm going to just kind of go to my other screen so you don't have to worry about looking at my mug. You're going to look at some charts. 1 second. Okay. Hold on 1 second. Where do we go? Hold on. Wait a second. I thought we were supposed to share that screen. Hold on. See? Technical difficulties right out of the gate, folks. Okay. Here we go. Okay. There it is. So I wanted to start by talking about the public debt of the United States. And this is an interesting little site called Statista. I don't know if you've ever checked it out. But every once in a while I'll reference it because they do some nice quick charts. And so if you look here, I want to just focus on the year 2000. I've mentioned that year quite a few times, from the standpoint of this is when China entered the World Trade Organization. This is when globalism really took kind of hit the gas. Okay, so you can see from 1990, the debt of the country was 3.31 trillion. Isn't that something? A lot of threes. Once again, you gotta love the fact that the numbers always tie out to 33 or 666 or 333. It makes you feel warm and fuzzy that debt is real, doesn't it? I'm always amazed, folks, that the debt could always tie out so elegantly to the number 333 or 666. So anyways, on Statista here, and so the government's basically reporting 333.31 trillion, right? Might as well have made it a bunch of threes. Why not just clean it all up that way? Anyways, so going back to 1990, and then we fast forward to 20, you could see that the debt was $5.64 trillion. Okay, so once again, there's a million millions in a trillion. Okay, never forget that. 1 million millions in a trillion. So if you took, if there's 100 million households and so forth, 100 million households, we just take a million divided by 100 would be $10,000. So just imagine if back in 2000, there was $10,000 of debt on 100,000 households per trillion. Now, keep in mind, this number is 5.67 trillion. So that would be $56,000 of debt for every 100 million homes or households in America. Now, keep in mind, right now there's about 125 million. So I'm just kind of simplifying it, folks, just to kind of get, just to keep the math simple, because I don't want to break it all down. I'm trying to just give you the concepts rather than get into the specifics on these points. But all things equal, in 2000, on balance sheet debt was $56,000, $56,740 on 100 million Americans. Okay, so let's take a look at what happens. All of a sudden, it kind of keeps climbing. You see that? Here we go. This is the Bush era. You can't mess with the Bush era. There you go. It goes from 5.6 kind of goes to 5.8, then 6.2, nice jump, 400, proud of you. Then another 400, okay. Wow, now he's really hitting the gas. Now we got about 600 billion there, and then all of a sudden, we go another 600, and then wow, look at that, another 600. So they kind of go in increments of 400 billion, and then it went to 600 billion, and then a little detour, 500 billion increase in debt. Wow, this is when he really hit the gas. $1 trillion, a nice cool trillion right there, and then all of a sudden Barry gets in. Wow, Barry he really hits the gas. 19% increase, folks. $1.9 trillion in 1 year, 2008, 2009, Barry's first year, $2 trillion. I just told you each trillion is about $10,000 for 100 million households. Okay? So right there, $20,000, $19,000 on 100 million households in America. The first year Barry takes over. Okay? Now we're at 11.9. So keep in mind, folks, we've doubled now. So in 9 years, we've doubled the amount of debt we owe. So all of a sudden, we went from owing about $56,000 per household to we owe $119,000 per household on 100 million households. Okay? Now all of a sudden, 2010, whoa, we go up another 1.6 trillion. Whoa, another 1.2 trillion. Holy cow, man. Look at this stock. If this was a stock, you guys would be really happy. In your portfolio, if you had a stock that moved like our national debt, I think everybody would be very, very pleased indeed. I'm going to actually show you a couple. So this goes from 14.7. Look at that. Isn't that something? We got 333 on the beginning end. Now we got 16066. They love their sixes, folks. Anyways, you guys think I'm making this stuff up. Look around, folks. Look around. They love to signal with their 3s and 6s. Don't forget increments of 3 and 6 as well. Okay, so 13. Okay, a little detour, 700 billion. Not bad, not bad. They're not happy about that. Okay, and then all of a sudden, look at that. Then it goes down, 17.8, 18.1, 16. Wow. Just like that, 1.3 trillion again, 17. It goes down, it only goes up 700 billion, 18, 1.2 trillion. That was the tax cuts. And then 1.2 trillion here. And then we all know what's happened since. It just went from 22.7, bam, 27. 22.7, bam, 27. Like, you're talking about 22.7 to 27. Now, keep in mind, right now it's about to hit 30. So in the last 2 years, just to give you guys some perspective, in the last 2 years, because of this virus, and you guys know what virus I'm talking about. We don't need to give it its special name. That virus ended up adding on more debt in the United States in 2 years than existed back in 2000. Okay? Never forget that. The entire history of the United States, for 224 years, we accumulated 5.6 trillion. And then we added that much in 2 years. And now you guys wonder why Bobby gets upset. My wife is like, why do you get so worked up about this stuff? And I'm like, first of all, that's why I laugh a little bit, because you can't make this shit up, folks. This is like we're living in La La Land on some of this stuff, because we just added on more debt in 2 years than we added in 224 years. And this is after Barry doubled our debt. So little Benedict Barry, he went in and doubled our debt, and he's like, I'll show them. There's going to be this virus that's going to come out, and then we're really going to hit the gas with regards to the debt exploding. And so when I say, as Americans, we should push to restructure or basically do a debt jubilee or haircut the debt or take it down across the entire economy simultaneously, I think you guys understand now why I say that. I don't say it because it sounds cute. I say it because I think we've been played. And I think that this is a bunch of horse shit. And I don't know how much of this debt is real. But, I think that we, the people of the United States, should audit all of this debt. So now let's go into this wonderful company, couple companies, they reported. Now keep in mind, folks, I'm not judging. I'm not judging any of these companies. This is just, something to think about. So I'm going to go back to my mug shot here for a second. So, okay, so let me tell you what's going to happen here. So I'm going to take JP Morgan's SEC filing. So you can go to sec.gov. You should look at it yourself if you have never looked at it before. Go to sec.gov, Securities and Exchange Commission. Now keep in mind, folks, 1933, 1934, I've actually read these acts. I'm one of those folks. So if you're wondering who the hell reads this stuff, I'm guilty. I've read those acts from scratch, as well as 1940 Investment Advisors Act. I like reading this stuff. There's always a great story as to why this stuff was created, and I enjoy understanding why some of these laws came into the books, because it's relaxing to me. Other people like to play Sudoku, or maybe Candy Crush. I like to read filings. So, anyways, let's talk about 1933, 1934. You go to the SEC, you can pull down any report on any publicly traded company. You can check it out. Go check it out. Check out anything you own in your portfolio, folks. And you know what? This is a really good idea. Anybody that manages your money for you, here's a great game to play with them. And say, hey, what'd you think about the SEC filing on the company that you just bought from me? Make sure you have them on Zoom call. Get that visual of what they look like when you ask them that question. It's not going to be the same over the phone. I think a lot of people in this business don't read, but they act as though they know all the stuff going on without the reading. It's pretty amazing. But anyways, that's just my, I don't know if it's true. Maybe these people just know how to get this information in their head through different means. But anyways, I like to go right into the company filings, understand what the hell I'm buying for clients, and from that, I make decisions on behalf of clients' money. So what I'm going to show you is the earnings releases that came out today. Now, a lot of people, and I understand, they go to CNBC or they'll go to Bloomberg or they'll go to Yahoo Finance and they go pull the numbers there. Now, no offense to any of those stations. I look at all those sites too. I will admit it. I'm not like saying I refuse to ever use their information. But for me, there's nothing is better than looking at what the hell the company said to the government. Like, what did it say that the CFO is on the hook? If they lied, they can be jailed, or they could turn around and be fined and so forth. Now, keep in mind, I want to talk about that. This is one of the reasons why I made that statement back in Arizona. The public of the United States, the public officials, the government, state, local, federal, they don't, the 1933, 1934 Act that applies to publicly traded companies in America doesn't apply to government. They don't have to attest to the documents that they're accurate, that they're truthful, that they've been properly looked at. In fact, a lot of the auditors come in and it's like, hey, Bill, yeah, you working for the mayor? Yeah. Mayor says I need to audit your numbers. Okay. Here are our numbers. Make sure the balance sheet, cash flow statement, and income statement ties out. Aren't you going to go and do all this other stuff that publicly traded companies do? Like, you got to go check check all the accounts, go check the physical assets, all this stuff. No, some of those rules don't apply to us. We don't do all that. You got to take our word for it. These numbers are good, and that's the problem, folks. These structures, these systems, with regards to our government and how our government can just come up with whatever damn numbers it wants, is a bunch of horse shit. And I think, and I've been arguing this for over a decade, probably almost 2 decades. I've been saying, when I first found this out, when I'm reading the filings and I read the law, I think I read it in my mid-20s. So it's been over 20 years, and I'm 45. So when I was reading those filings, I was like, this is bullshit, that the government is exempt from having to file quarterly like publicly traded companies. It doesn't have to file an annual report. It doesn't have to show its outstanding pension liability to each taxpayer, that we know what the hell we're on the hook for. But any single publicly traded company that takes on any kind of debt or does anything like this has to be reported. So I think that we, the people, at some point, we should pass a constitutional amendment to require any government anything that collects money from us, any government agency, to have to follow by the same damn rules. So anyways, it would have helped prevent a lot of the fleecing that has taken place of the American public. So that's just something to think about. So now let's go to, let's go to JP Morgan. Hold on one second here. So I'm going to pull this up, and JP Morgan, here we go. JP Morgan has some good numbers to report. Okay, so here we go, folks. I'm going to bring this up over here. I'm going to flip back to our screen so that you guys can have a look. And you can go follow along, or go check this out later on your own. You go to sec.gov, and then you can see that here's the report. And I want you guys to think about this, okay? The United States, we've gone through hell this year, right? There's a lot of people that lost their job. We still have 9 million people not working. A lot of people, especially in the lower rung of the economic ladder, got hammered. And I just want you guys to remember that while all that was happening, look at how well JP Morgan has done. So JP Morgan, believe it or not, they had income of $14.3 billion with a B. $14,300 million is what they earned in the last quarter. Just in 3 months, folks. They're making almost a cool $5 billion a month. That's pretty impressive. They're making $1 billion a week on this run rate if this holds. So now I want you to see that here's the profitability. So if you guys are ever wondering, how much does my bank make off of me? Man, these guys are making a lot of money. How much do they make? Well, let's take a look. You can see right here, the first quarter, they did $33 billion of revenue. Non-interest expense is $18.7 billion. They put aside $4 billion for losses. They made $14.3 billion. Okay, let's go by line of credit or line of business. In consumer and community banking, $12.5 billion is what they did in revenue. Isn't that something? $6.7 billion was what they brought home. You want to talk about bringing home the bacon. Man, JP Morgan knows how to bring home the bacon. Look at how much money these guys are making. They're bringing home the bacon. Look at how much they're making. So you can see right here, a year ago, first quarter, 2020. Now, things were a little tough. JP Morgan had to tighten the belt, folks. You know, we had that little pandemic going on last year. So they went from earning $2.8 billion a year ago to $14.3. So just to give you an idea, a year ago, they still managed to make almost $3 billion. So remember that, guys. When you guys are, when the American public was losing money worrying about how they're going to pay their bills, JP Morgan still managed to make a 10% profit margin. So imagine anybody out there who's in business for themselves or a retailer, and you sell $1 million worth of stuff, and you're lucky if you make 30 grand per million you sell, a 3% margin. JP Morgan was making was bringing home the bacon, making 10% on their revenue. And then now they made $14.3 billion. Now, granted, some of this is from credit loss. The credit losses reserves that were reversed to $5 billion. So, you can adjust that. I will give them that. But the reality is they made that money. So, this year they've basically made, 14 divided by 33. It's not exactly 50%, but it's at least 40%. So 40 times 30 is 12. 40 times 3 is 1.2. Look at that. It's 40% on the nose. I wonder if they targeted 40%. A 40% profit margin up from 10% a year ago. So these guys have really crushed it. And you can see how much money that these folks have been making. And while everybody else in the economy has been kind of getting their ass handed to them, the banks, don't cry for the banks, folks. So let's go take a look at how JP Morgan has done. So the reason why I showed you guys that debt slide, I wanted to show you guys that debt slide one more time. Hold on a second, because this is I got a lot of stuff, what do they say? Got a lot of losses. Remember, anybody see that movie with the Hanson brothers, Slapshot? We're losing a lot of money here. The American public, we got this massive amount of debt, and we're just getting crushed by the amount of debt, because this number went from 56,000 on households to 300,000. So the average American household right now if there's 100 million, we just rounded it down from 125, is about $300,000 of debt for each and every American household right now. Think about that, folks. Okay? Don't shoot the messenger. Okay? Just because I'm bringing it up doesn't mean I made it so. So, and you could check all this stuff out for yourself. But I want you guys to take a look at this. I brought up 2000, right? And in terms of the banks, JP Morgan was about, $50 right here. And then all of a sudden, the financial crisis hit, right? So now, JP Morgan dropped to $16 right there, right on the low, March 6, 2009, right? There's that 369, baby. You can't mess with it. 369. Multiples of 3. Bam, they just take the market down to their favorite numbers, 3, 6, and 9. So at $15.93, bam, what's happened since the financial crisis? It's up tenfold. JP Morgan has made you 10 times your money in the past 11 years, 12 years. Wow, that's unbelievable. You're up almost tenfold on this bank. But now I want you, and I didn't do this, but I want you to just look at that. You think these guys make more money when the debt of the country goes up? That's what I wanted to show you. Is it a coincidence that this stock price continues to go up as the debt of the country goes up? Just a silly question. I don't know. Maybe everybody should look into it. I'm just saying, spurious correlation maybe. But something obviously is going on when the debt of the country continues to explode and the banks continue to explode and how much they make. You got to think something's off, folks. And so let's go to good old Goldman Sachs. There, look at that. Isn't that something? Hey, you guys, you can't make this up, guys. It's almost like it's being scripted for me today. Look at that pre-market price. Oh, they just changed it on me. It was 333 and they just changed it. They changed it back to 331. They knew Bobby was going to point out 333 and they changed it on me. Anyways, I'm just joking. Oh, but it is up $3.32. We need one more penny. Can we get one more penny? I'm going to leave this quote right here. Let's see. Maybe we'll get lucky and we'll get one penny there. Let's see if we get that penny. Anyways, I want to go bring up, Bloomberg or Goldman Sachs reports now. Okay, so I'm going to keep this here because maybe while I'm pulling that up, you guys will see it kind of tick off to 333. That would be pretty special. And it's pretty amazing. They almost tied it out exactly to what it closed yesterday. That if it was exactly up 333, anyways, it'd be nice and symmetrical. But hold on a second here. If you want to go to SEC, we go to SEC. I'm kind of pulling it up here, folks. So you can see right here, I just do GS, Goldman Sachs. And then right there, I'm going to pull down the 8K because this is the quarterly report. And then we're just going to do the financial, the press release right here. Okay? So we're going to do the press release. Here's the earnings for Goldman. And we're going to look at Goldman Sachs. This is the one. Oh, by the way, I have to do it, folks. I know everybody was waiting. They're waiting. I just want everybody to know Goldman is doing God's work. Okay? Never forget that, folks. Goldman Sachs is doing God's work. Never forget that. They're doing God's work. But I want you to take a look at what God's work pays. If you do God's work for the right company, you definitely get paid quite a bit. Because I want you to take a look at something here. So this guy, Blank Fine, has been in Goldman Sachs. You can take a look here. He's been there, his whole career, but he became the CEO in 2006. So right before the financial crisis, this guy kind of took over. But, keep in mind, look at that smile. You'd be smiling too, as folks, if you saw this right here. You see this right here? This is as of July 2015. He's made $1.1 billion, folks. So you'd be smiling too if you had $1 billion. And, what's pretty interesting is Goldman Sachs was bailed out. So if you go back, when you look at Goldman Sachs, financial crisis right here, remember? It went down to like $50 as well. It went to maybe 60-something, $66. I wonder if it hit 66 in the middle of the day. That'd be something else. I have to take a look at that one. It's 66.73. But anyways, what is it at today? $327, $330 pre-market. So it hasn't done too bad. Now keep in mind, it hasn't done as well as JP Morgan, but I guess maybe he's doing God's work, so the stock couldn't do as well. Maybe that's it. Maybe he was, some of that charity was going to God's work. But anyways, I want you to remember when all those millions of Americans were losing their houses, that Blank Vine and as well as this guy, Jamie Dimon of Chase, these guys all did okay. They did all right. He's worth $2 billion. See, the stock went from one stock went up tenfold, the other one went up fivefold. I guess that makes sense. One guy makes $1 billion, the other one makes $2 billion. So Blank Fine, you got Jamie. He's worth $2 billion. He hasn't done too bad for himself, and but I guess maybe he didn't want to do God's work as much as Goldman Sachs CEO. But let's get into the earnings real quick because I want to kind of wrap this up. Okay. So here we go. Look at this. $17 billion of revenue, 17.7, $7 billion almost in earnings. Look at that. $6.84 billion with the B. Look at how much money these guys make. Now, anybody who's in business for yourself out there, I want you to just wrap your head around that. Like wrap your mind around how much money that is when you can make $7 billion and $17 billion. So if you're a retailer and you're doing 1.7 million or 1.77 million in revenue and you made 684,000, everybody would want to be in that retail business, wouldn't they? Well, I guess Goldman Sachs figures, you know what? I like making money off of shuffling paper around a little bit more. And so they break it down. By the way, they have to report all this, folks. So here's the beauty of corporate America. Everybody could go pull all this information down. And I've been looking at this and reading it for basically 25 years. If you want to understand, why I know a lot about how the economy works and so forth, part of it is because just reading all this material over the past few decades, all these companies explain how they're making their money in the economy, what they're doing, how they use different levers of power and government at times. You got to read between the lines, folks. They don't make it super obvious, but if you know how to kind of read between the lines, they tell you. So in terms of which areas are making money, all areas. David, they're making money everywhere. They're making money on FIC. This is fixed income, currencies, and commodities. That's 22% of their revenue. Investment banking, taking companies public. Consumer and wealth management, that's 10%. Asset management, this is where they manage money on behalf of people. And then equities, this is probably trading and so forth. But you can see right through here how much money they make on everything here. And so let's just take a look at how they've done a year ago, okay? So year over year, investment banking has almost doubled. It was $2.2 billion in 2020. Now it's $3.77 billion. FIC, which is fixed income, commodities and currencies, that's done pretty well as well because those numbers, it's about a 50% rise, 5.1 billion to 7.6, which is unbelievable. How many people out there have had their business go up by 50% in the past 12 months? Can we see a show of hands? But anyways, Goldman Sachs did. And so, that's how much they did with regards to, this is where a lot of government bonds and so forth would be trading, is the global markets. This would fall under FIC, fixed income, which is nothing. Fixed income is another word for bonds, for those of you who don't know. So that's the deal. And you can see non-interest revenues, how much they've exploded. They've gone from $7.4 billion to $16.2 billion. And the revenues have exploded, 8.7 to 17.7 year over year. And you can see their earnings. Man, damn, it feels good to be a banksta. My nephew told me that about 15 years ago. He used to tell me all the time. He used to go, "Don't hate the player. Don't hate the players. Hate the game." And he goes, "These guys are just a bunch of banksters." And when I sit there and I look at this, I was like, he was right. He was right. These guys do kind of feel like banksters, because when everything's going to hell in a handbasket, they still seem to thrive, and they've thrived very much so. Now here's the deal, folks. I'm in a weird spot, because what do I do for a living? My job is to try to identify and make money buying companies in the world, and look at the ones that know how to make money best. And I have a fiduciary responsibility. I just want to make this clear, that my job is to try to make money, period, legally. I don't do anything illegal. I look at the information, and I put money to work based on what I'm seeing in the information. I don't have any inside information. I don't have people that I talk to at these companies. I don't talk to anybody at these companies. I never have my whole career. What I do is I read the filings. I go into the filings. I read what's being said. I read other industry reports. I read what's happening in their competition. And I basically triangulate. And I just look around like a gigantic puzzle, and I think about what I need to, what's going to do well, what isn't going to do well. And so, I guess why I'm doing this, and you might be wondering, okay, Bobby, you sound like you're kind of, you're upset that these banks are doing this to us. And yes, as an American citizen, I am upset that there seems to be some weird stuff going on that we're not fully informed about by our government, by these banks, by these other institutions. But we need to look into it. In the meantime, while we're looking into it, my job is to go find what makes most sense to put client money to work. So it's a weird thing, right? Because I have some clients telling me, they're like, well, I don't know. I'm trying to avoid investing in things that don't make sense. And I agree, certain things I will not invest in. I will not personally invest any money on behalf of clients, or and I say they can do it themselves if they want, where there's a direct investment in China. Okay, China is a communist nation. I am against communism. I think it's a different form of Satanism, or it is the one and the same. I think communism and Satanism are one and the same. It's a very evil ideology that tries to enslave human beings, and so I want nothing to do with it. And so, as a result of wanting nothing to do with it, I tell clients, I can't invest that money on your behalf. But if you want to invest there, it's your money. I'm not going to try to stop you. But you might have to pull the trigger yourself. I'm not going to be the one that buys it on your behalf. And so, but at the same time, some of these other companies, I'm constantly looking to find who does a great job of deploying resources, who does it in a fair way, all this stuff, this nonsense, that they're trying to pitch on people. They try to say, oh yeah, we need to do social scores, like that crap. Oh yeah, we need the carbon score. I got in an argument on LinkedIn about it once, and got some people all worked up. But I basically said, look, if you can't convince people with your story to make different decisions on how to buy or sell, why the hell do you think you need to force them to do it through a bunch of horse shit where you try to pass the laws? Obviously, your ideas are flawed. If people believed you, they would change. But clearly, people are not believing you. So, from my perspective, I'd rather err on the side of what do other people see and what are other people thinking with regards to these other issues that other people try to cram down our throats. And it's like, you know what? Get the hell out of here. I want nothing to do with this crap. And and these folks that are involved in this, that's a whole nother series as to what's happening. And that I don't even know if I could do that. That would take me a hell of a lot longer than 10 hours. That could be almost like one of my. I'm doing the greatest book ever written, which is the Bible. I'm on day 53 today of 365 days. what I'm describing about all this other stuff would probably take me 365 days as well to explain it all, because it's just that insane. All the different things that these individuals involved in these companies are pulling behind the scenes, and the entities that are kind of calling the shots. The American public just doesn't, the public is in the dark on this, folks. And nobody out there is really sounding the alarm and explaining it. And it's tough, right? I will say we have 37 people that were watching. So 37 more Americans are going to hopefully get the word out. Feel free to share this if you like these videos. I don't put any ads on them because I think it makes. I ran the math early on, and it was like, it was costing people that were watching my videos over $7,000, $8,000 a month in their time being lost based on just the annual per capita income of about 60 grand a year. And my attitude was, you know what? I think I'll just take that down. I don't like the fact that people are having that much of their time siphoned away with these 15-second meaningless ads and stuff. So anyways, YouTube is still, I guess they might not like me very much for doing that, but that's okay. I'm building other alternative things, and I got to get my things going on Rumble and so forth. But anyways, all I can tell you is if you like the videos, you think they're helpful, feel free to share them, get the word out, and at some point I'll have alternative stuff in place too, and this will be something I'll be doing. Obviously, these two companies reported today. I'll probably be doing some other stuff as well. Maybe I'll do another company or two at the close today, since we're in the middle of earnings season. And since we're in the middle of earnings season, maybe it'd be kind of cool to maybe highlight some of the companies that most of us kind of heard about or know about or maybe do business with. And then you guys can see for yourself, do you want to keep doing business with them? Maybe you're like, you know what, man, I'm at JP Morgan and I don't like the fact that they're making that much money. There's this local bank down the street. Maybe I'm going to go talk to them instead. I don't know. Maybe that'll happen. And I'm not telling anybody what they should do. I believe each person has the freedom to make their own decisions, do what's right for them and their family. And that's the way it should always be. And we should have laws that protect those most sacred rights of being Americans. And so I'm just trying to do my part. Anyways, thank you guys for listening. God bless you. God bless your family and friends, and have a wonderful day. And I will see you guys later today at 4 if you end up chiming in at 4 o'clock, 7:45 and 4. And thanks again, and I will talk to you guys soon. Have a wonderful day. Thanks.